breaking down the deals, data, and disruption shaping global markets. You're listening to The Daily Ledger with Dennis Sert.
Hey folks, today is Friday, November 28th, 2025. This is the Daily Ledger Show. I am your host, Dennis Sert. Good to be with you here today. Hope you had a good Thanksgiving. I have a couple stories for us today. I want to just dive right into it without spending too much time on an intro. So the first thing I wanted to cover is the DC shooting. What happened was on November 26th, so a couple days ago, a 29-year-old Afghan national named Ramanullah Rakanwal shot two National Guard service members, Sarah Beckstrom, who is 20 years old, and Andrew Wolf. Sarah has unfortunately and very saddeningly passed away. So our hearts and thoughts are with her family. And Andrew Wolf is in critical condition right now. He's fighting for his life and in very bad shape. So, we hope he'll make it. But for both of them, our condolences are with their loved ones, and we thank them for their service. So, okay, let's move on to this story here. This is from Reuters. Banks in talks to lend $38 billion to fund sites for OpenAI, Financial Times reports. So it goes into this story where I guess Oracle is building a new data center building for OpenAI. And this is kind of tough because the entire AI infrastructure race is being financed with debt, not profits. Because the fact is, OpenAI hasn't hasn't made profit yet. They're projected to lose $10 to $14 billion this year, and they haven't yet shown a path to profitability, which is why they can't borrow the money themselves like Google or Microsoft can do. They have to basically strike deals with CoreWeave, with Oracle, etc., with Azure to host these data centers for them, right? And so we see kind of a recent example of that sort of happening here, right? So here's Oracle, right, who's essentially financing $38 billion in order to build this data center or these data centers for OpenAI, right? And it kind of illuminates this interesting dynamic between Microsoft and their competitors, like Oracle, for instance, right? Because Microsoft has 49% of OpenAI's for-profit arm, and they sort of have to get along to go along here, because in reality, if this was any other situation, Microsoft wouldn't probably want to sign a deal with Oracle, right? Just because they're competitors. But because Microsoft has to keep OpenAI alive, they're going to go ahead and co-sign on any deal in order to keep them alive, even if it's to their detriment. Now, it's not necessarily to their detriment because they're keeping OpenAI alive, but again, they have to sort of deal with their rival, if you will. So that's the kind of interesting position Microsoft is in on that. So they'll essentially co-sign on anything to keep them alive. So there's that. Let's move on to this story here. this is the last one I have for today. We're going to keep today short and sweet. This is from the Wall Street Journal. Tech titans amass multi-million-dollar war chests to fight AI regulation. So what's happening here is that some of the big players like Mark Andreessen from A16Z, OpenAI, like Greg Brockman, who's the co-founder of OpenAI, and a bunch of other players, big players, are essentially lobbying for AI deregulation. So what's happening is that, for instance, states like California are passing laws that regulate AI more and more, and this is also being done at the federal level. And the reason that that's happening is because the other side is saying that unchecked AI will cause a national security risk and kind of further job loss. But of course, the sort of AI side is saying like the AI startup side is saying, no, we need to keep going. Otherwise, we're going to lose the AI race to China. And my take on this is actually the latter. I think if we get a little trigger happy with regulation, we are going to stunt the growth. And the fact is, we're already having job loss. We're already having deep fakes and stuff out there. We just need to get better at sort of combating deep fakes, and we need to allow the market shift to happen, because just making it slower isn't really gonna save anybody. Like, just rip the Band-Aid off. The genie's already out of the bottle. So that's my take on that. And this one kind of hit home for me because, well, let's take the voice AI space as an example. So in California, they passed this law a few years ago where if you're a voice AI company, or actually any company, you can't use voice AI unless you have what's called express prior written consent by the consumer or by the user, unless you're in the healthcare space. And then you need express prior consent, right? So the term written kind of, I guess, like leaves in the healthcare domain. But yeah, that actually causes a lot of issues day to day for AI startups. It basically means that you can't make outbound AI calls to your customers without their permission, which kind of defeats it doesn't 100% defeat the purpose of voice AI, but it kind of takes a huge slice out of what can be possible in terms of improving productivity for companies. If you can't make AI outbound phone calls sort of, as you wish, sort of at your whim. Yeah, and so that's just an example here where AI regulation and laws are sort of stunting growth because, well, okay. I mean, it's just so ridiculous because, like, okay, wow, like I'm really saving productivity here. I'm really saving the consumer here by not allowing this outbound AI phone call. Okay, so if someone were to scam you, they would. So let's say the state is trying to protect like scamming or whatever, right? I mean, the scammer is just going to call you themselves, right? Rather than using voice AI. And you could say, okay, well, I'm getting too many calls. Okay, then put yourself on the do not call registry, right? Which is something that whenever you make outbound phone calls, you have to respect. Yeah, you have to respect the federal do not call registry if you are making outbound calls, legally speaking. And it's funny because, when you put those solutions on the table, there isn't really a good reason to not allow outbound AI phone calls. Because again, malicious actors, right, like phishing people, like etc., are just going to call you themselves, rather than have the AI do it. Okay, well then they just, they totally just got around the regulation, right? So anyways, so that's my gripe on that. So you know what? More power to the AI startups, more power to AI deregulation. Again, the genie's already out of the bottle. Just rip off the Band-Aid here. So yeah, that's my take. Okay. Let's move on to Byte AI Market Analysis, which is the sponsor of the show. Byte AI Market Analysis is a financial co-pilot. It basically gives you analysis for your stocks in your portfolio, as you can see here with like Tesla, Meta, Nvidia. It tells you whether or not the stocks are neutral, overbought, or underbought in that moment. It refreshes every half hour. What does it take into account? It takes into account news sentiment. It also takes into account technical indicators like the RSI curve, signal MACD curve, Bollinger Bands, etc. And it comes out with a succinct stamp of whether or not it's overbought or underbought or neutral at that time. So if I were to click into here, I could read as to why it is. And so it's sort of a tradition on the show to go ahead and just read a few of these that are non-neutral, like this one here. Make sure you download this. It's available as an iOS app as well as with the web app, which is how we're accessing it right now. If you use the code podcast20 at Stripe checkout, you get a 20% discount. Make sure you know that Byte AI nor I are not financial advisors, and past success doesn't guarantee future results. Now, that being said, let's read. Meta analysis overbought. The 1-day RSI is 70.36, which indicates an extremely overbought condition. The price is sitting on the upper Bollinger Band with a very narrow bandwidth around 3.06, implying price compression and a higher likelihood of mean reversion rather than a durable breakout. Okay. Yeah, RSI at 70 definitely does mean extremely overbought. Recent coverage on Meta is predominantly bullish, led by near-term catalysts like AI-driven ad monetization and positive competitive dynamic assessments. Okay, very nice. So that's Meta for us. And then Microsoft, and then we'll end it after this one. Microsoft analysis overbought. Technical indicators show Microsoft entering an overbought vicinity, RSI around 62. Price trading near the upper Bollinger Band with a tight bandwidth, and MACD hovering close to the signal line. This setup suggests limited near-term upside and a higher risk of mean reversion towards the mid-band. Okay, 62 RSI, somewhat overbought. News analysis. Across the set of articles, Microsoft is portrayed as a stable, non-speculative AI/cloud stock. Overall, Microsoft sentiment is neutral, with two pieces nudging towards somewhat bullish. The broader narrative centers on a hot AI infra wave, highlighting AI infrastructure, cloud competition, and hybrid cloud momentum. Okay, very nice. Alrighty, folks, I think we're going to end it here. Again, make sure to download Byte AI, use the code podcast20 at Stripe checkout, and I hope you guys have a great weekend. All right, peace.